Good day and welcome to our first half 2024 review. It was a really good period for the Peregrine capital funds and more importantly for South Africa as a whole. Our high growth fund ended the first half up 8% with the pure hedge fund up about 5.8%. I must say it was an exceptionally tricky period to manage in South African markets with the 2024 South African national election, and we were monitoring the portfolio and our positioning on a daily basis to ensure we could navigate through this very volatile market successfully. And I'm very pleased that we came out nicely out of the other side. Justin's going to give us some more color on that later on. At the same time, we're very pleased with the load shedding outcome we've seen in South Africa. We've now had 110 days without any load shedding. I can tell you a year ago, no one would have believed that this would have been possible. I think it highlights the benefit of contrarian thinking in an asset manager. When everyone thinks one thing, it's often worth investigating and doing work to figure out, is the exact opposite perhaps true? And we did this a year ago with the load shedding situation. Our team did a lot of work on what was causing the load shedding and how the future could potentially look like. And we realized two main things. The demand on the grid would reduce significantly as consumers, houses, companies put in solar power and thus provide more of their own electricity, while at the same time, we would see the availability of the Eskom fleet likely improve. We saw some easy wins for them to improve reliability of the fleet, while at the same time continuing solid levels of planned maintenance to ensure that it's not just a one-time boost, but a permanent improvement in the coal-fired fleet. And we must say, credit to Eskom, they did this even better than we thought was possible, and to have 110 days without load shedding and potentially a really good outlook for the power situation leaves South Africa in a much better position going forward. But let's cover the important thing that happened in the last 6 months. Justin, I'd love it if you could give us some color on the SA national elections and what transpired.
Sure, Jacques. I think as every South African knows, this was probably the most important election since 1994. It was a watershed moment for the country, and I think we were really on a knife's edge. This was reflected in the equity prices on the JSE, as well as the cost of borrowing on our bonds, which were at record levels going into the elections. So at Peregrine Capital, we had to navigate through this period, and I think we had three specific scenarios that we envisioned at that point in time that could be the most could be likely based on the election outcomes. The first scenario was where the ANC got above 45% of the national elections. In this scenario, it would be quite easy for them to cobble a coalition together with a bunch of small parties, and it would probably be status quo going forward. So I don't think we would see too much change, and there'd probably be a moderate recovery in the value of some of our equities on the JSE. The second scenario, which was probably the worst case scenario for us, was if the ANC fell below 45%. At that point in time, we had envisioned a potential coalition with the EFF, given that this was probably one of the more ideological or ideologically sound or fit parties that the ANC would get into bed with, especially given where the EFF came out of, which was the ANC. That scenario would have been tragic for South Africa, because I think if you look at certain of the municipal outcomes in Johannesburg and the Ekurhuleni in particular, the track record of that sort of partnership has really brought disastrous consequences for the residents of those specific municipalities. The third scenario which we envisioned was a much less likely scenario at that point in time, and that was where the ANC fell below 45%, but they would ultimately choose to form a government with reform-minded parties such as the DA as well as the IFP. As we sort of evaluated the situation, this really was not the most likely outcome at that point in time with the information that we had available. The elections happened, and the ANC got 40.18% of the total vote, which was substantially lower than what anybody had anticipated at that point in time. The markets had no idea what to do and were extremely volatile, because I think the concern was that scenario 2, the EFF outcome, was just far more likely at that point in time. So we waited, it ebbed and it flowed, and in the preceding week after the elections, it became quite clear that President Cyril Ramaphosa of the ANC wanted to form a coalition with government or with parties that were respectful of the constitution and of the rule of law. And that, by virtue of its name, excluded parties like the EFF and the MK, which were sort of major beneficiaries in this election. At that point in time, the DA outcome became more and more likely. And within a week, we knew that Cyril Ramaphosa was elected as the president of the country with the support of the DA, the IFP, and a host of smaller parties. But this wasn't the end of the road. Once again, we had to go through another 2-week period where government needed to be formed and cabinet positions needed to be appointed. This was a very difficult period because the ANC wanted to keep as much control and power as they possibly could, while parties like the DA were extremely vociferous in their negotiations and wanted to gain as much influence as they could if they were going to make a difference in this new government. The end outcome seems to have been more favorable for the ANC, but it's quite clear that many of these positions of authority in quite important government departments have been allocated to the DA, the IFP, and certain other parties within the country. I think it's worth reflecting on this outcome for a moment. I don't think anybody expected we were going to be here if we spoke to you 18 months ago. This was really a watershed moment and the best case outcome for the country. And it really sets a very, very firm foundation for future growth and reform so that we can actually start getting runs on the board insofar as economic output is concerned and job creation to deal with South Africa's economic woes that we're currently suffering. So we are extremely optimistic. We understand the challenges that are going to come to the fore as a result of this coalition framework. It's not going to be easy, but I think we're on a much better path today than we have been over the past 10 or so years. So what does this mean for the positioning of our funds? Well, because the equities and the bonds on the JSE were extremely cheap, we were able to buy incrementally to take advantage of this cheapness. However, we were extremely concerned about the potential risks of a negative scenario coming to the fore, which is why we had the ability to use currency derivatives in order to hedge our exposure and provide us with some protection in the event that the worst case scenario did come to the fore. So it was really about balancing opportunity against a very significant risk, and I think we did come out fairly well on the other side of that.
So this was a contribution to our first half return, but also I think a big contributor was all the positioning we had in SA. We built positions in SA companies last year when they seemed very undervalued because of load shedding, and we took further advantage of the uncertainty before the election to build SA positioning. And our goal really was, as Justin touched on earlier, was to capture as much upside as we can from South African shares, but realizing you don't know the outcome of the election up front. So how much upside can you capture while using hedges and other hedge fund tools, derivatives, to protect the downside in case the favorable scenario did not play out? And I'm very happy with how we kind of manage both the offense and defensive side, which is always the two hats a hedge fund manager has to keep on. So I'm going to hand over to Justin to just talk a little bit about current positioning and the outlook for the second half.
So I think, as Jacques alluded to, we've had a strong start to the year. The funds are well positioned to continue to take advantage of opportunities that we see. The South African outlook in particular is substantially better today than we had even dreamed about 6 or 12 months ago. So, if you take a step back and you think about, the election outcome has resulted in a strengthening of the currency. The bonds have also tightened quite substantially, which means there's a lower cost of borrowing for the country as well as companies in the country. And that's resulting in lower inflation in the coming months and hopefully years. That should give the Reserve Bank scope to reduce interest rates, which should free up additional income for consumers on the ground, but should also provide companies with the capacity and the confidence to invest further in their businesses, thereby generating additional capacity, growth, and jobs. So I think the South African outlook is much better. It does come with risks, but we are substantially better off than we were 6 to 12 months ago. the funds have sold some of the equity and bond positions that we had into the recent rally. We've created additional cash capacity, so that gives us further options to deploy into new opportunities as and when they arise, and talks once again to our contrarian nature. When everybody is a lot more bullish, we are taking a little bit off the table right now. And then finally, I'd just like to say a big thank you to all of you, our investors. Without you, there is no Peregrine Capital. So we have the ability to do what we love every day by investing our money alongside yours in the hope that we can grow your wealth and ours. So thank you very much.